Hello and welcome everyone to today's webinar. I'm Michael Gable. It's just a half-hour webinar for those that haven't attended my prior webinars. Just half an hour. I'll cover off on what I think about the market, any stocks that we're trading at the moment, and I'll open up the floor to a Q&A. All right, hopefully everyone can see the correct screen. Again, if there's any issues, let me know. And of course, before I get started, any advice is general only. Just very quickly about us. So you're obviously familiar with all the stuff that we put out there, but our core business is in portfolio management. So this is where we look after accounts above 500,000. We only charge brokerage, get your own HIN, you deal directly with myself and my manager, portfolio manager. I can do a free review if you're interested, but we do sell a lot of our dynamic investor reports. So if you don't have 500,000, consider taking that up. We do have our end of financial year offer before 30 June, and I'll continue to send information out about that. So just very quickly, just one thing to note, you know, we did have a webinar only 2 months ago. Not a lot has changed. So I'll try to go through this section maybe a little bit quicker this time, and that'll give us a little bit more time for the Q&A. Because as you could see, this is a daily chart of the S&P 500. Yeah, since we spoke in mid-April, you know, expected a bounce. Maybe we didn't expect it to be all the way up near the old highs so quickly, but there we are. You know, it's edging higher. Volatility's been low. That's a good thing. Just really have to run with it. So they're all the positives. You know, there's still a lot of worry out there. We're climbing the wall of worry. I guess if I was to try to pick something negative at this point in time, you know, in terms of the US market, it is up near the old highs. So naturally, you'd be looking for some resistance. And potentially the way it's traded since sort of late March is resembling that of a rising wedge. So I've put in a couple of blue lines there to show that. I mean, that could be bearish, only if you get a downside break. But I'm just, you know, trying to remain open-minded. There are some positives out there. There are some potential negatives, but those potential negatives haven't given us the sell signal yet in terms of the S&P 500. In terms of our market, yeah, this is a weekly chart I've been showing for a while. You know, upside break above that blue line early last year. We did come back to retest that on a weekly basis. You know, intra-week, we did go under it in April, but, you know, we did get back above it. And our market's been touching all-time highs in the past couple of weeks. So again, just the momentum's there. There's reasons why it could fall potentially, but we're not seeing any signs yet. And just a few other key metrics to keep an eye on. US dollar. Now, this is important because not just for, you know, general, you know, companies that import or export in Australia, but it does have a big bearing on our commodity stocks. US dollar's been fairly range bound for a bit over 12 months. There was a bit of an upside break there after the election, and then it fell back in the range, and now it's broken underneath that trading range. So ultimately, the US dollar does look weak here, and that has a positive consequence for metals and, you know, commodities in general. Oil, very interesting. So there was, it looked like there was a major support level in place for the past 3 years. That's the blue line. It broke under that. And this is something we've mentioned in the Dynamic Investor report over the past few weeks. It's hanging in there, and it was threatening to break back above that blue line. And now we've seen that happen. So potentially we could now be seeing a rally in oil. So get ready for higher oil prices. Gold. So this is something I've liked for, I don't know, 18 months. I mean, obviously we had that breakout. For those that are new to this, in March last year, this is just a daily chart going back several months. It did peak in April, of course, with almost at the peak of the market turmoil, and has been consolidating. So the blue lines there show the consolidation. Now it's not so simple to say that, if I think gold's going up, it's because I think the market's going down. That's not the case. All through, the last 12 months, share market's gone up, gold's gone up. So gold's up about 50% in the past 12 months. So it's not one or the other. They can both go up at the same time, and they are going up. I really like the look of gold here. It's recently broken out, and I think it's starting to get another move on. Another commodity that I think looks really interesting. So this is a chart that I had in the Dynamic Investor this week, and we have looked at it a couple of times, and this is silver. So the interesting thing about, well, the one thing to note about this chart is the scale on the right-hand side is a log scale. In other words, each sort of square that you move higher is the same in percentage terms as the previous one. So if we have a look at silver, say over the past 45 years or more, it's formed a massive cup and handle formation, and that's a very bullish formation. So it's just a case now of well, I think it's still a buy on any dip, but if you get a break above that blue line, I think I was around 37.50, you'd see the next rally, and you could see silver go up multiple times in value. So very interesting one to keep an eye on. So look, in terms of our recent buys, as I said at the beginning, look, not a lot has changed. I touched on some buys back in April. Most of those are still live. We're running a trailing stop. So BHP, Macquarie, Pro Medicus. These are things that we bought, still holding. We have taken profits on. We have had trailing stops get triggered just recently on some of our positions. So this is for our managed accounts. Pinnacle Investment, XDC. These are ones that we bought near those lows in April. But just as I said at the beginning, just go with the momentum of the market, run a trailing stop. You could be surprised how high things have gone. I've been surprised. I knew them. Well, we suspected and we're pretty confident the market would bounce in April. Bit surprised we've made it so far, but that's why you need to run a trailing stop. But in terms of something I have bought recently, got back into uranium. So this is a snippet from a report a few weeks ago in the Dynamic Investor report showing the ETF to give you a better idea on what's happening in that sector. Look, it's a sector I've liked for probably about a year and a half. I think first half of last year sort of did really well, and then we entered a correction period for that sector. A lot of the stocks pulled back, to be honest, more than I expected them to. But without spending an hour going into the reasons why, I think they've turned around. So there's enough reason for me to believe that sector, the prices have turned around. They're on the way back up. We can now see that in the ETF. What I bought for clients was actually Boss Energy. So we picked one stock, which was Boss, which is a producer. But look, it's a sector that I think could go up quite substantially from here. And I encourage you to have a look at it. All right, so we skimmed through that. As I said, look, not a lot of new stuff, but everyone loves the Q&A. So let's do the Q&A. But before we get into that, again, if you have a portfolio that you want managed by us, please let me know. Otherwise, make sure you're getting the Dynamic Investor and make sure you're taking advantage of the end of financial year special. The coupon code is there in red. Use that. Any problems, call our office. That one. So hopefully everyone could see the chart. Should be a chart of the XJO. Again, just shoot me a message if I've stuffed something up. and you can't see it. But I'll get stuck into the Q&A. So the first one off the top is Yancoal. So what do we think about the chart of Yancoal? So yeah, normally what I like to do is start off with a weekly chart. So here we've got the daily. Look, we do have a few indicators down there, but let's switch to the weekly and get a bit more of a feel on what's going on. In that sector, I did look at Whitehaven Coal, I think a couple of weeks ago in the Dynamic Investor, and I thought it was breaking a downtrend. We could see here with Yancoal, first thing to notice is, look, last few years, it's essentially gone nowhere. There's been the big swings that you could trade, but essentially gone nowhere. What becomes very obvious here, and this is similar to Whitehaven, there's a very clear line formed, very clear resistance line, and it seems to be right at that now. So I guess that's telling us what we need to keep an eye on, and that's basically a break of that line. So it's right there now. Maybe it needs to consolidate under that line a bit more, but I think if we could just wait for that break, then that would be the buy signal. Next question is buying Brickworks or SOL before the merger. Look, it's not one we hold, so I'm not fully across the current valuations and where they're at. I mean, that's Sol Pat's. That's the chart of Brickworks. Yeah, I'll have to come back on that one. Okay, next question is, what do I see for the share price of Aurora? So look, this one doesn't look crash hot. I mean, straight away, I know this is only the daily chart. I could see a downtrend. If I switch to the weekly, yeah, pretty ugly looking chart, unfortunately. So it's basically halved. Share price is halved. And if we switch back to the daily, I'm not seeing here anything that's encouraging. So, straight away, I think we need to give that one a miss. Okay, the next question is on BHP. So I've left a line here from last time I looked at it. There was an obvious support level on BHP. We might have looked at this one in the last webinar in April. This is one of the go-to ones that we decided to pick up. There have been some other better ones in hindsight, but we could see that sort of BHP rallied, sort of consolidated under the blue line, cracked it, did come back under the line, but held on to this low and has started to move higher again. So look, I do think it'll head higher, and possibly it's even a buying opportunity at current levels. Okay, the next question is on CQR. So we start with the weekly. Obviously, it's done really well since the start of this year. In terms of share price performance over the past 5 years, depending on where you got in, you may still be underwater or not really making much money at all. But I suppose very roughly, you could say, well, there was a line there that was broken, a downtrend. It's on the way up. Where's it going to hit resistance? I mean, you'd think near this peak, a bit over 420. So maybe there's another 5%, or maybe it could do a 10% and retest these peaks here. So yeah, and moving to the daily chart, no warning signs there. It's just edging higher, nice low volatility. So not too bad. The next question relates to what kind of trailing stop we use. Look, we do have a system that takes into account a number of things, but I think one of the easiest ways to get started is to use a moving average, like a 20-day or a 50-day. And you could basically fit that depending on the personality of the stock. Some are more volatile than others. The other thing is to look at your higher highs and higher lows. So as you have a stock sort of making highs and lows, you basically don't want to see it take out previous low. So you could use that as your trailing stop level as well. South 32. So look, the weekly chart's obviously a bit messy. It's been coming back. This one's also got a pretty clear downtrend line to it. Like most of the market, nice reversal off the lows in April. So we'll switch back to the daily chart. And we could see that, you know, it's had its bounce, pullback, another rally, another little consolidation, and it looks like it's undergoing a consolidation there. So still looks like it's heading higher, but yeah, look, not a screaming opportunity here, but yeah, it looks like it's edging higher. It needs, I think, for the long term, needs to get back above that blue line. Okay, the next one is 88E. So you could see by that it's maybe not the best one for charting. I don't know the business. Yeah, so look, sorry, there's not much we can add about that one. Next one is on Woodside. So that's you know, another stock that's sort of bounced well off the lows, but hitting what looks like a bit of a trend line there now. So naturally you'd expect some resistance here, and you know, on this scale it's above the line, but on the weekly chart it's pretty much on it. So yeah, just, you know, if you're looking to buy this one, I think you have to wait for the next period of weakness. Okay, the next one is LDR. I don't know this one. Go to the weekly. Yeah, look a bit, obviously it's been a bit all over the place. I mean, we could sort of make out a bit of a break here from something that resembled a bit of a range. Obviously not a lot of volume and a bit gappy, so there's not really much I can add, I'm sorry, on that one. Next question is the best way to buy silver. So there is an ETF, ETPMAG. Hopefully you could see that if you want to write it down. This tracks the silver price. There don't seem to be many, like, you know, we don't seem to have sort of pure silver stocks here in Australia, where you can maybe get a bit of leverage, but this one should just follow the silver price. Okay, next one is Zip. That's the weekly. Obviously, if we go back far enough, it still looks a bit ugly, but you know, it had a phenomenal 2024 before giving back most of those gains, and then we've seen a huge rally. So it's obviously, you know, more than doubled since those lows. So pretty wild. If we just move to the daily chart, yeah, I mean, a lot of that move has come just here. So this would have been a buy signal. So you would have had what looked like a bit of a consolidation, and then to overcome all of that in one day on I'm assuming big volume. Yep, that was that volume day. That would have been the buy. Look, now it's up here near this high. So you'd have to wait for another sort of, you know, I think another consolidation. I couldn't be chasing it up here. Aristocrat is the next one. So yeah, look, it's, you know, like a lot of the market sort of fell earlier in the year, managed to bounce, but then it sort of gave up a lot of those gains here on an announcement. It hasn't continued falling. It's, you know, it hasn't really snapped back up either, but it's put in a bit of time here, so a bit of digestion for the market, and now it looks like the market's starting to buy back in. But you know, you've got this previous level here is going to be very strong resistance, because for those who felt like they should have got out here but didn't, they might be looking to finally use those numbers as an opportunity to get out. So just watch the resistance there. It's not one I'd be rushing into at the moment. Okay, Ampol. Ampol is very much a retailer now. Yeah, so this is the weekly chart. So it took it a long time to make it from sort of $20 to to 40, and then it managed to go back to 20 in a fraction of the time. Obviously bounced pretty well like the rest of the market. So if I move to the daily chart, after that bounce, so where's that peak? 15th of May. So we've basically spent a month going nowhere. That doesn't look really enticing to me. You could, if you're holding it or looking to buy it, I think you'd use this little range here as your, upside break buy, downside break sell. But yeah, not looking very bullish at the moment. So next DC, look, it is one that we got out on a trailing stop, and it has jumped back up a couple of days ago. So it now looks like it might want to edge a bit higher. You've got a big resistance level here near 15. So I wouldn't be chasing it here. I think if you get any sort of weakness back to 13, and if it can hold on to this low, then you might have another buying opportunity. But I'd just be careful chasing it now. Next question is on BOE being the most shorted stock. So this is, I touched on this as one that we've bought. So if we have a look at the weekly chart, you had some very bullish divergence. So in other words, the RSI here on the weekly chart bottomed out. When was that? Back in September. It's been edging higher, whereas the price went lower into earlier this year before bouncing. It's taken out these peaks, which is a positive. It's consolidating, and I think it'll go through this high, if I'm honest. The fact there's a lot of shorts, well, I think there was about 24-25% of the stock was sold short a couple of weeks ago. I think that number's now dropped to about 18. But I'll just move to the daily chart, and you could see why, because yeah, if you need to buy back this stock and it keeps climbing, it's just going to get worse and worse for you. So the covering of those shorts would be an added positive to the share price. Okay, Bravura Solutions. So we've got, so we'll go to our weekly chart. Yeah, it's obviously had a massive run up, very deep pullback here. But then we could see a bit of, almost like a little triple bottom, and now it's on the move. So this does look like it wants to head higher. So I do think that one's looking good. Not a stock I follow, so I don't really know much else about it. MinRes. So I had a look at this in one of the videos last week, and we indicated, so this is a daily chart, that if it snapped back up pretty quickly, you might end up with an inverse head and shoulders, and that's sort of what happened. Not that I predicted it would snap back up, but just being open to how the pattern might eventuate, and that's sort of what we've got there. So in other words, break above the blue line, and you've got a short-term trade. St. Barbara, so it's a gold stock. Obviously, it hasn't tracked the gold price completely during this period. I don't know why, but from this point onwards, looking good. So rally, taken out these peaks, consolidated, bounced, another little flag, bounced again through these resistance lines. So it does look like this one wants to head higher. Qantas. So we'll go to the weekly chart. Obviously done extremely well. We could see that it's since the lows in April, it's managed to surpass its previous peak. But yeah, look, that does look a bit vertical. So it's made up a lot of ground. So this is the daily chart, obviously hitting a bit of resistance here. So I'd say there's a consolidation underway, and you need to wait for either a pullback or for it to finish and then break higher. Telstra, so still got some lines here from when I last looked at it. Surprised at how high this has gone, if I'm honest. It's obviously still well down from where it was many years ago, but yeah, that's the weekly chart. So it didn't really encounter too much resistance here near 440 like I thought it would, and it's managed to continue edging higher. So you stick with the momentum. There's no warning signs here. It just keeps pushing higher. Maybe it's just a function of, like like a lot of other top stocks in our market, just basically passive money, just buying the major stocks to get exposure to the market. It could just be another case of that. Question on the REITs. Look, I like Goodman Group. I think they're all doing well. Goodman Group, sort of the safer bet. There was a bit of resistance here recently, and it broke above that. Nice retest, and now it's just edging higher. So now I'm expecting Goodman Group to head back up to these levels. Next question, Spark New Zealand. That's the weekly. It doesn't look good, unfortunately. So yeah, you've got a bit of a recovery here, but on a long-term time frame, yeah, it's a very slow recovery. It's not like it was deeply oversold and it snapped back up because it was just an absolute bargain. So I'd be careful with that one. CSL. So the long-term chart, I've still got some lines here from when I last looked at it for somebody. Big consolidation. So you don't want it to break under that line, but down here you could say, well, it's a buy back to the top of the range. And if it can get out of the top of the range, then that would be a massive positive. But, it's still early days for all of that. Fortescue, so let's go to the weekly. We could see that, one thing to notice is there's a major low here that it sort of broke under before reversing. So it's almost like a false downside break, which is a very positive sign. And look, now it's motoring along, and this sort of formation here, it's almost like mineral resources, isn't it? You've got this sort of potential inverse head and shoulders happening. So it does look like it's going to retest 17, and if it pushes through 17, you've got to trade up to $20. All right, we've only got a few more minutes, so I can only do a few more stocks. Sorry for those that have just thrown in their questions recently. So Pepper Money, PPM. First thing I'll notice, this looks like a base breakout. So yeah, any kind of dip here, I think is a buying opportunity. Endeavour, still got the downtrend. So still early days on that one. Next question is on Wesfarmers, another one of those sort of top 20 stocks that's just seeing a lot of inflow, I think, from passive funds. This is the daily chart. Yeah, no warning signs yet. So just stick with the momentum. All right, I'm just trying to find some stocks that we haven't already covered. Okay, one of them's RSG. Gold stock. Put some lines here from when I last looked at it for somebody. So yeah, just coming off the lows. I'd say at this point it needs to hold on to this sort of 55-cent level. That's your nearest low. So you could potentially buy it here with a really tight stop. Okay, BGL. Yeah, downtrend, trying to form a base, but too early to know. We've hit 5:30, but I'll just go on just for a couple of more minutes. CBA. Everyone wants to know what CBA is doing. Well, as I always say, just another example of, just take what the analysts say with a grain of salt, because the beginning of last year, they were saying that it was a sell. We're saying, well, it's broken out of above a major resistance level, so you should get a sustained rally. I didn't expect it to be $180, if I'm honest, but yeah, that's why you stick with your trailing stocks. There you go. Who would have thought? Question on Karoon Energy. I covered that in a video this morning. You could see that on the website. Just grab a couple more and then we can finish up for today. Question on IGO. That looks very much like, get rid of my old lines. That looks like mineral resources. So we've got these sort of bottoming inverse head and shoulder patterns. Very interesting. And I'll just grab final one. PNR. Well, okay. Maybe that won't be the final one. Let me find something that's a bit more useful. That's just obviously whatever happened there and it's just going up. Maybe there's been an adjustment and my charts haven't adjusted to that. Okay, final one, Sandfire. So there you go, massive V-shaped rally off the lows. I mean, the weekly chart isn't really telling us a lot apart from it's, generally headed higher, of course, with the copper price, which I think still looks pretty well supported. But yeah, it's managed just crack to a new high and finding a bit of selling. So I think now people are using this as the opportunity to take a bit of profits. I'd expect a bit of short-term weakness, but then you'd be looking for that that weakness to end, and then you could look to buy again. Okay, well that's all for today. Thanks for the webinar. Sorry if I couldn't get to your question in the Q&A. We still do our Your Stock Request video every Thursday morning. So still send those through and I'll try to have a look at your stocks. So again, thanks for coming. I'll edit the video, throw it up on the website, if not Friday, then Monday. Keep an eye out for the end of financial year offer for the Dynamic Investor Report. And if you want to have a chat about our management service, then please give me a call. I'm always happy to have a chat. Good night and thanks again.